today. Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. So today, I decided to do a little something different and see what's going on in the States. In the United States, okay? Because usually the information that I give to you is federal government specific. But you know what? There's a lot of times that stuff is going on in the states that really doesn't hit the news, and people don't figure it out until it's time to file. So while not all 50 states are going to be covered, so don't take it personal if your state is not here. It's just that, there's nothing new and exciting going on the tax front in your state right now. Okay, one of the biggest state tax news items is the Seattle corporate tax. So what Seattle has done is imposed a tax on corporations with 20 million in receipts or more per year, which means it's 20 million in sales, not profits. Okay, that's a big difference. So Amazon is one of those companies, and they were not excited about this tax. Seattle imposed this tax as a way to help combat homelessness in the Seattle area, because if you did not know, it is high to live in Seattle, okay? It pays, you guys to pay if you're going to live in the Seattle area. So Amazon was fighting this and saying, this is going to stifle job creation. They feel like they're being punished. And Seattle said, okay, well, you just got a big tax cut from the federal government, so you should have some extra money. So you should be all right. Okay. So, yep, they passed that. Now, California is also looking to follow suit for companies like Google and whatnot. There are these huge corporations in California, so they're looking to follow suit behind Seattle. We'll see. We're going to see how that's going to work out. All right. In Louisiana proposed a sales tax increase, but what I found interesting is that they also proposed a measure to increase the state's earned income tax credit for lower income families to offset the sales tax increase. Now, the sales tax in Louisiana is currently 5.5% or something like that. They lowered it to 4%, and now they're going to raise it to like 4.3%. But the interesting part is the proposed measure to increase the earned income tax credit for lower income families to offset that. Okay. New Jersey. Now, New Jersey has decided that it's going to tax e-cigarettes, the little vaping things, the electronic cigarettes. Okay, so New Jersey said, we taxing. Okay, people are kind of ticked about that because because they're saying that people use these e-cigarettes as a way to quit smoking, and this is going to penalize those people. And the other argument against the tax is that when Pennsylvania did the same thing, that put some e-cigarette vendors out of business. So either way, New Jersey said, whatever, if you got them, we taxing them. Okay, so for my e-cigarette businesses in New Jersey, get ready for that. If you purchase it in New Jersey, get ready because you're going to pay. All right. Delaware has signed into law the Angel Investor Job Creation and Innovation Act. And so the aim of this act is to bolster startups in Delaware by incentivizing investors with a refundable tax credit of up to 25% of their investment in qualified businesses. Okay. So if you're investing in qualified businesses, you got a tax credit coming. Alabama has passed the simplified seller's use tax. This is really for my e-com squad here. Okay, this is important because what they're doing is they're putting this in place for people who sell products for use in Alabama. So if I'm in Massachusetts and I sell something, someone from Alabama buys something from me, whether, like on Amazon or something, then there's this seller's use tax that you got to pay. Okay. It is up to the retailer to collect the tax. and to send it to Alabama. Now, what I also found interesting with this whole e-commerce thing is that a lot of states are closing the sales tax loopholes where where it used to be, gosh, back in 2000, gosh, I got started in e-commerce 2012, 2013. The majority of the states did not charge sales tax, but here we are now, some 5 years later, 5, 6 years later, and the states have said, no, we're going to be taxing that because it is making it more difficult for the local retailers to compete. Because if I can go to a local store and buy headphones, and if I can go online and buy the same headphones and not have to pay sales tax, then I'm going to go do that. Now, for me, I look at shipping too. I'm like, okay, if I save on sales tax, but I got to pay shipping, to me it's a wash. But the main thing is that, states are closing these sales tax loopholes. So if you have a physical presence in a state and you're selling on e-commerce, which is called a nexus, or if you've got inventory stored in particular states, like with Amazon, where they have your inventory stored in various warehouses across the United States, you need to be finding out if you're going to have to remit sales tax to those states, if Amazon is going to be collecting the sales tax or whatever to keep you legal. Because the last thing that you want to do is find out later on that you got all these letters coming from these states saying, hey, you owe us all this money and we want it now. Okay. So be on the lookout for that for my e-commerce squad. Now, Georgia and Iowa, they cut income taxes. Yay! Now, Florida, in Seminole County, Florida, they are planning to accept cryptocurrency for tax payments. Now, that is interesting, okay? Because cryptocurrency, of course, is very controversial. People, whether it's viability, whether it's going to stay, it's going to go, all of this stuff, okay? But Seminole County, Florida is planning to accept cryptocurrency for their tax payments. Illinois. All right. So the courts ruled in favor of Chicago for the Chicago cloud tax. Now, what this is, if you live in Chicago, meaning that if you got a zip code in Chicago, your business is in Chicago, whatever, if you're using a streaming service like Netflix, for instance, then you're going to be charged a cloud tax, and it is a 9% tax. And now, there was some organization that filed a suit that said, no, Chicago can't do this. But Chicago simply said, listen, it is just an extension of the entertainment tax that is in Chicago. So they just rewrote the law to include those streaming services, basically closing that loophole, right? So yeah. So if you're in the city of Chicago, if you live there, if you have your business there, you get some streaming services, you're going to be paying the tax. All right. Michigan. This is what I found very interesting for Michigan. One of the things that Michigan has done that is super, for lack of a better term, is that you can still claim personal exemptions on your Michigan tax return. With the Tax Cuts and Jobs Act, personal exemptions were removed in favor of doubling the standard deduction at the federal level. But what Michigan has done is said, hey, you can keep your exemptions. This is important for my folks that are in Michigan. If you have people who prepare your taxes like that may not even live in the state. And, and I don't know what the software is going to do, if the software is going to be written to where those exemptions are in there, or if it's going to have to manually be done. Don't know how those software updates are going to work. So if you live in Michigan, then you need to know, the one thing that you need to be aware of and to look at on your Michigan state tax return is if you have those exemptions claimed. Ohio. Ohio has expanded their 529 plan. 529 plans is when you get to, tax deductible savings for your kids' college, right? And so now Ohio has said that people that save for 529s can use those funds for private education K through 12. Now, this has some people ticked off because they're saying, okay, well, this is an advantage to the wealthy because it's the wealthy that really invest in these plans where everybody else can't. So they're getting a tax break for this, for paying for this education where, if a regular person that doesn't have money to invest in a 529 plan is trying to send their kids to private school, they don't get the same benefit of a tax-free education. So that's going to be something interesting to watch in the future as well. Wyoming. Now, I don't think any of my client base is in Wyoming. However, just in case, Wyoming introduces a new bill that will exempt cryptocurrency from property taxation. That's interesting. Now, the last thing I want to talk about, so first of all, those are the major things that are going on across the states. But the last thing I want to talk about is these qualified opportunity zones. So as of right now, the Treasury has certified and designated these qualified opportunity zones. And what is that? Qualified opportunity zones are areas that the governors of each state have submitted to the federal government where investors can take their capital gains and invest in these qualified opportunity zones. And if they keep their investment for 10 years, they can exempt up to 15%, I do believe, of their capital gains tax. Okay. And if they're in for 5 years, I think it's up to 10%. So if you have capital gains and you invest in, in these qualified opportunity zones, you stand to save a lot of money, but you must have capital gains to invest. So the qualified opportunity zones have been designated in Alabama, Arizona, California, Colorado, Delaware, Georgia, Idaho, Kentucky, Michigan, Mississippi, Missouri, Nebraska, New Jersey, Ohio, Oklahoma, South Carolina, South Dakota, Texas, Vermont, Wisconsin, Puerto Rico, American Samoa, the Northern Mariana Islands, I don't even know where that is, and the U.S. Virgin Islands. Okay, so with these qualified opportunity zones, like I said, this is the opportunity that if you have capital gains to invest into these areas, and what these governments are doing they are creating these qualified opportunity funds that you can invest in, so you can have investments in different areas. Okay. And so like I said, you contribute to these funds, and as long as you keep your money in there for 10 years, you can, like I said, I think it's 15% of those taxes of that income would be tax free. Okay. So this is a way that the wealthy are going to get wealthier through real estate. Okay. These qualified opportunity zones. All right. So that is what's going on in America. So now is a look at what's happening in your neck of the woods. Isn't that what Al Roker says about the weather? But no, you guys, so I think I'm going to do this like once a quarter or so to see what's going on in the states and how it's going to affect you. Because with your taxes, it's not just at the federal level. You got state taxes to deal with as well. And you need to know the changes that are going on within your state. So you can really make the best decision for yourself and your family of how you're going to manage your money. Okay. So I really hope this gives you some insight, some news you can use. So, but if you find out something interesting going on in your state, let me know. And I'm happy to do some research and learn about it because I'm just that kind of tax geek. Okay. So thanks so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, 9 o'clock-ish, and you can come here to get your questions answered about your home business taxes. Have a great day, and I will see y'all next time. Bye.